I spoke with David Hale, founding chairman of David Hale Global Economics.
Well, Congressional Budget Office made it very clear a few months ago in an analysis of the Fiscal Cliff issue that if we fail to resolve the issue in the next 10 days, this could set the stage for large tax increases and spending cuts in January and February that could drive the U.S. economy back into recession. And such an event would probably lead as well to a very major stock market decline. So we're very, very vulnerable here in the next 10 days to bad news, depressing equity markets, probably not just in the U.S., but globally, because the American economy is still the world's largest. So if investors saw a recession coming to the U.S., it'd have an adverse effect on investor sentiment all over the world.
Yeah, you talked about the global impact, and right now the United States, China, those economies are really driving the global economy, if you will. If those engines continue to sputter, and what a lot of people are concerned about in the United States, if the economy here simply tanks, what does that mean? You're talking about many places in Europe, Spain, Greece, with unemployment above 25%. How much worse can things get?
Well, it would obviously have a very adverse effect on global trade, because if the U.S. had negative GDP, that would probably mean as well falling imports in the first half of the year. And that'd be a negative for all the economies in the world that rely on foreign trade. Very negative for China, very negative for South Korea, Taiwan, and Japan, very negative for Germany and Italy, because they both have high ratios of exports to GDP. So it'd be a general negative. It would be basically a 6-month or 9-month shock to the global trading system.
What are you telling people right now when people ask you, what do you think is going to happen in the next 2 weeks?
I think it may well take a U.S. stock market crash to break the gridlock in Washington. I see lots of parallels to the vote we had back in September 2008 on the issue of TARP, the plan to rescue the American banking system after Lehman Brothers went bankrupt. The Senate passed the legislation, went to the House, was voted down. The following day, the market fell 800 points, and the following day, the Congress, the House, approved the TARP program. It may take something like that to break the gridlock in Washington over the next week.
That is horrific news. I mean, there's no way to couch that. Are you surprised that lawmakers don't get this? Conservatives clearly digging in their heels, not wanting to push through any kind of tax hike, especially one that could affect a razor-thin demographic in this country.
The problem is the current level of ideological polarization in Washington has no precedent in the last 100 years. We do have very, very deep divisions, ideological, political, philosophical, and this has made it very, very difficult to achieve any kind of compromise. We also have the problem on the Republican side that members of the House enjoyed pretty good margins of re-election victory a few weeks ago, but they're terrified if they vote for a tax increase, they might face a primary opponent in 2 years' time, which could jeopardize their hold on their seats. If the public ends up blaming the Republicans for this,
which polls do show that they blame Republicans right now.
Well, if it comes to pass, then the Republicans could suffer major defeats next year, not just in primaries, but in the general election itself, losing their seats to Democrats, not just other Republicans. But right now, the Republicans are ideological. They're quite determined to prevent tax increases. That's getting in the way of any compromise. The reality is, Democrats now in private are hoping for a stock market crash. I had a phone call yesterday from congressional staff from a very senior Democrat, and they called me to ask, what will it take to get a stock market crash in the next 3 or 4 days to break this gridlock? So indeed, members of Congress now are themselves hoping there will be a stock market crash to break this gridlock.
Insight from David Hale.